Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Shawn Cruz. He's a manager of trader services over at TD Ameritrade with our midday update. And Shawn, you're thinking investors should be a little bit cautious here buying into any of the dips.
They are. I think right now you're seeing a lot of back and forth as you get more information out about what's going on with the coronavirus. I think right now we really don't have enough of an indication that this is going to be resolved anytime soon that I would say go in and buy in these dips with both hands. I would say if you're going to try and figure out when maybe a good time is to start testing those waters, I would at least wait until you get a slowdown or at least a stoppage in the number of people that are actually getting added to the rolls of the affected. That was really when you saw SARS start to turn around, was when you finally stopped seeing more and more people get added to the list of the infected. That was when SARS started to get a little bit of a recovery, and I would look for something similar right now.
All right, well, it's kind of tough to say that on a day where we have all the major averages up about 2% or more. So I'm going to pull up our first chart here, and we're looking at earnings return. Do you think this could have anything to do with some of the green we're seeing today?
We've gotten some pretty good news out of some of those names out there. It's been a little bit more of a mixed bag. If you look at what the market's been doing, though, they've been punishing companies that have been missing on their earnings, and you see that right here. If you do beat on earnings, you're not getting rewarded quite as much. So it does show a little bit of a cautious tone out of investors going into the year. I would say if you're going to go out there and look at companies, look at like something that we saw with Google today, where they were able to come out. They didn't really meet what a lot of analysts were looking at, but yet you're still getting analysts upgrading the stock, raising their price targets on hopes for things to turn around in 2020. But if you just look at the general tone of the market so far this earnings season, they've really been hammering companies that have been missing on revenue or earnings or both.
Yeah, it's really surprising to see technology leading the way today because those companies have a lot of exposure to what's happening in the China market. And we'll get a couple of those semi names out after the close today with Microchip and also with KLA Tencor. But to see them leading the way with the Nasdaq Composite and the Nasdaq 100 up over 2% each, on track for a record close, it's pretty surprising considering the exposure that they have.
It is, and I think if you're looking at this as some sort of a trade, this is one of those environments where you can really get sort of caught in the wash here back and forth as we're up one day, down the other. If you wait for the days where we're up to go in there and buy, you're going to be buying high. If you wait for the days where we're down to try and get out and sell, you're going to be selling low. So that's why I say you want to be a little cautious here if you're going to go in and try and trade the ebb and flow of these markets, because you really can get ripped back and forth. And I think a lot of this is just going to be dependent on what we hear coming out of the coronavirus and their ability to address that issue.
All right, let's pull up our next chart here. Crude, no surprise to see it trading, a little bit volatile here with what's happening with coronavirus, and just demand has been flat.
It has, and one thing to look at, I was looking at sort of indicators of where we're at globally in terms of stress. Gold to crude oil ratio is actually something that you see spike, and usually when it gets north of 25, that's indicative of some really high, I'd say, stress and uncertainty, not just here domestically in the U.S., but globally, and that causes that flight into the safety trade of gold. But you also see things that benefit from high levels of global growth like crude oil. Those actually start dropping off, and it causes that spread, that ratio to expand. So right now we just broke above 30. The last time we were up around these levels was around 2016, when we also had a little bit of a period of global uncertainty. So if you're looking for something to maybe let you know that some of this uncertainty or some of this, this risk-off trade is starting to really start to come undone, you could watch this and see if it starts ticking back towards that mid-20 range. That might be a good indication that, one, you're getting the safety trade that's going into gold, that's coming undone, and you're starting to see money flow back into crude oil as maybe estimates for global growth or faith in global growth coming back online in 2020 start to reflate as well.
All right, our last chart here, Disney. Of course, everyone's going to be looking at earnings after the close here, the impact to their theme parks with the coronavirus, and I would imagine streaming is going to be a hot topic as well.
And this is something where maybe if you were interested in the streaming space or just what was going on in media in general, you always wanted to see what Disney had going on. I think now with their theme park business, they've got theme parks in Shanghai, they've got theme parks in Hong Kong. I think investors are actually going to want to hear from management to see what they're seeing on the ground. And I actually expect a lot of the other consumer discretionary names to start to be a little volatile as we hear what Disney's seeing on the ground, especially the names, the multinationals that have a large presence and a lot of their growth coming out of the Southeast Asia region. And if you want to look at what option markets are priced pricing in about an $8 move in either direction, about 5%. But if you look down at implied volatility, which we use to gauge uncertainty in any given name when there's a big binary event coming out like earnings, you see that it really spiked higher here over the past week or so. And that's just because a lot of investors are not certain what this is going to mean for Disney and their exposure to Southeast Asia.
All right. Thanks so much, Shawn, as always, for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
And their exposure to Southeast Asia.
All right. Thanks so much, Shawn, as always, for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.